Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, Leap Day, February 29th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days. 4 full months now of an uptrend above the 50-day moving average and all but one day above the 21-day exponential moving average. On the S&P 500, you can see the trend gauge over here. We've got the coveted 4 green arrows representing market leadership, and also the 5 major indexes, which we review in every one of these videos across 3 time frames: the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. So yesterday we discussed how stocks had been coiling for a move in a tight range over the past 3 days, waiting on PCE data or some catalyst that in this case was the catalyst. As PCE inflation data came in line or slightly better, we'll call it Tame, and stocks broke to the upside pre-market, pulled back a couple times during the day, but closed strong. Here are the final numbers. Big 7 up 1.29%, doing it without Apple, as Apple continues to struggle, just barely holding on to that key 180 level, and it better continue to hold on to that, because that's a massive level of support for Apple. RG8 up 0.83%. S&P 500 opened up 0.4, rallied a bit, pulled back twice, ended up just slightly above the highs of the day, or near the highs of the day, up 0.52%, equal weighted just slightly below that. NASDAQ 100 gapped up 0.7, ended up 0.86%, equal weighted 0.2 lighter. Dow still weighed down by some high-priced underperforming stocks, just up 0.12, mid caps up 0.8. Russell 2000 small caps kind of disappointing, gapped up 1.5%, but bled as the day went along, still ending up 0.71%. Possible fly on the ointment for small caps tomorrow. After hours, New York Community Bank, which is one of the regional banks that took over a bunch of loans from those too big troubled regional banks, and it said that they were going to delay some financials because of internal controls related to reviewing those loans. As of right now, KRE's looking to be down about 1.5%. This big percentage of regional banks make up small caps, so possibly starting with a headwind tomorrow on small caps, but end of the day up 0.71. Global 60/40 stock and bond up 0.29%. In-house GROTECTION up 0.9%. Weird drop right in the last 20 seconds in a couple of our names, including NVIDIA and the indexes. In fact, the SPY closed up 0.36, kind of getting a bad tick, while the S&P is showing that it was up 0.52. That's a pretty big separation from what's supposed to be a reliable way to track the index, but I digress. Let's get on to the charts, and we'll start with the S&P 500 here, and we'll go to a 30-minute. It's really better to show on a 60-minute the lines that I have been drawing recently, and you can see here's the move up on NVIDIA, and then the tight pullback, and then we stopped, and then we went sideways for a little while, and then there's the gap up today, and there's the sell-off, but held the bottom of this range, and then strength into the close. Leaders doing a bang-up job also. Here's the NASDAQ 100. You can also see that declining tops trend line and a break above that. Back test that 435 area, and that held. And that's a spot, 435, that we need to continue to hold on the NASDAQ 100. On the S&P 500, the lows of that gap up day are a similar spot where we really need any pullback to hold that area, that in this case is about 50-40, give or take. Dow Jones Industrial Average couldn't quite close the month above 39,000, but close enough. And same situation, declining tops trend line that it broke broke above today. Here's breakout for mid caps showing relative strength. You can see the relative strength line right there, confirming the move, at least recently, but not over the past 2 months, as mid caps lagged badly in January, along with small caps that are now playing catch up. Here's the small caps gapping up to this 205.49-ish pivot before reversing and closing about 40% of the range on the day. The dollar started weak, got stronger as the day went along, bouncing at that 200-day moving average there. The VIX, we would want to see it down along with the indexes, and it was now below the 21, the 200, and the 50-day moving average. Still at 1340. It's got room. The low was 1181 back in December, so the market's higher, but the VIX is not making a lower low. So minor divergence there. Let's move on to, despite the strong dollar, the dollar being up today, I'll show these for old time's sake. Gold with a gap up. So showing some strength despite the fact that we did have dollar strength, and showing a double bottom pattern on the daily chart here with a 190-136 pivot. But note the relative strength on gold. There's no reason to be eyeing this. If stocks can, as long as stocks continue to be stronger, you're investing in something that's underperforming, and you've heard me say that multiple times. Not the way to go. Gold stocks up 2.25%, but still can't get above the declining 21-day moving average. What the heck, we'll throw in silver up 0.88%. That doesn't look good either on a relative basis. On the bonds, nope, not on the bonds. On the Bitcoin, as it continued inside day today, closing higher, but the Bitcoin complex stocks like Mara, the miners, down quite a bit today. MSTR, a proxy, continues to look good. So there's BITO inside day now on the bonds. Bonds up across the board, meaning rates breaking lower. Here's the broad bond index. Here's the long bond up 0.71, which means the 30-year yield dropped by 0.8, and the 10-year down 0.5%. Let's move on to the tail of the tape. You can pause this. PCE inflation data, as I mentioned, day count reset with the breakout to up 1, 6 days above the 8-day exponential moving average, 37 and 80 out of 81 above the 21-day moving average on the S&P 500. So any break of the 21 will very clearly be a change in character, and we would lighten up quite a bit should that happen, because the bigger they are, the harder they fall. The higher you go in space, the harder you can fall. And corrections. There's so many Wall Street axioms: escalator up, elevator down. But we'll be ready. We keep raising our stops and creating a higher floor for our accounts. Sectors, let's see here. Semiconductors, ITB builders. I mentioned gold and silver stocks, regional banks, but that may change tomorrow. And tech on the downside, biotech cooling off a bit, oil services, and some defensive sectors down or weak, financials, staples, utilities, and healthcare. In the portfolio, we bought one name, added to two names. Nutanix reported after hours today, or yesterday. Good reaction. We bought some of that, and we added to AMD on a strong breakout, and Ralph Lauren RL as it made a higher high. Bottom line, tight range breaks higher on Tame PC. Tight range breaks higher on Tame PCE inflation data. All-time highs are not bearish, so if you smelled something near the close today, that might be singed bear fur. Let's take a look at some charts here. We'll start off with the trades we made today. Bouncing at that 180 level, making a higher high, reclaiming the 8-day we added to Ralph Lauren. AMD, very strong day today. Ted's been talking about this one for a while. Big move up, 9%. Still, and now above 195 after hours. It's still going, but a very nice breakout over this flattish base. 43% above average volume. It went up on big volume here. It contracted on volume, and went sideways just the way you want it to. The relative strength line is confirming this is giving you everything that you want. Numbers are great. Everything you would want in a growth stock from behavior and in the hottest sector, which is anything AI data center related. So there's AMD, which we added to. Here's Nutanix. This is another data center uh, type stock, gapped above the 60 level, closed near the top of the range, up 7% on 224% average volume. That wasn't even in the top 4 of strongest names today. First, we'll go with one that got dumped. Something weird about Snowflake, down 18% on the day. They reported earnings they beat. They lowered guidance. They said their CEO is leaving immediately. And some weird things in the conference call. I posted it to the fellas. I've never seen anything like this, saying that they're giving soft guidance to give the CEO an easy target to beat. I mean, how can you trust a company when they actually, well, at least they're not lying to your face. They're telling you what they're doing, which is rare. But weird action today. There's leaders. This is no longer one of them. Again, leaders take the -2R moves down, and this is one on earnings. It happens all the time. That's why we properly size into earnings to limit the downside. So there's snow. Now here to the upside, 3 names. Celsius initially was down on earnings. Excuse me. Once the market opened, bam, to the upside. 641% average volume, up 20%. Add to that Okta, OKTA, a security stock, closed mid-range, big gap up 23% on the day. Number 3 is AI. Gapped up on 600% above average volume, 24.5%. And finally, Duolingo, which had been correcting. Uh, Duolingo, nice earnings. Still hasn't broken out of the base, but still up on 500% above average volume, up 22% on the day. Let's show a couple of more in the portfolio. How did Uber do today? Uber did what Uber does. It's just trudging higher. It's a little bit of a slower name, but consolidating nicely after that big earnings gap higher. NVIDIA up nicely today. Didn't exactly do what AMD did, but that 800 area is offering a bit of resistance. What else in the big names that we hold? CrowdStrike down a bit after hours, down 2.5% as Zscaler reported and is down 9% after hours. So a sympathy play there, very similar to what happened with Palo Alto. We'll see if it recovers tomorrow the way Palo Alto did. Another couple of earnings winners, Dell. They provide data center servers. It's not just buying a personal laptop from Dell anymore. Up 16% on their earnings report. Network appliance, NTAP, break out of a base up 12% if this holds. And another leader faltering after hours, ESTC down 12% on its earnings report. That's going to wrap it. As always, I'd like to hear from you. Emails don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart can be reached at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Reminder, our flagship portfolio is named GROTECTION because it serves a dual purpose, that being to grow assets during uptrends and protect them during downtrends. We are market technicians, active managers. We've studied the rules of William O'Neill that dictate that the best way to make money and not give it back is to follow the trend of the overall market. When the wind is at your back, get heavily invested. When it's not, get out of the way. Common sense approach. And our clients sleep well at night knowing we've got their downside protected. And with that, I'll wrap it for the video for the month ending Leap Day for February 2/29. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.